The 5 historically worst asset bubbles that we know about. If you're going to say the Dutch Tulip Mania of 1637, you're wrong. Yes, it was an asset bubble. Yes, the prices were exorbitant. I think one rare tulip cost maybe, I don't know, 10 years of a Dutchman's salary. When the bubble burst, speculators were the ones who were hurt most by it, and the Dutch economy was able to recover quickly because at the time, they were the world's reserve currency. And the Dutch didn't lose their world reserve currency status until 1795 after the French finally, after centuries of invading and harassing the Dutch, finally conquered them. Speaking of France, the Mississippi bubble ranks number 5, and that was when the French owned a lot of the Louisiana territory and a lot of the investment came through the Mississippi Company. Speculators from all over France, including the French monarchy, started making these huge investments and taking on vast amounts of debts because of all of the riches that were promised in the Louisiana territory. All of that speculation came to a screeching halt when French investors wanted to start locking in some profits because the value of the stock actually went up 40 times than it originally was the year before. And the problem was all of this money that rose the price of the stock wasn't from successful trade deals in the Louisiana territory, it was just from all the speculation. So as more people sold their shares, it was very hard to inflate the price of this stock. As a result, this stock plummeted and it destroyed the French economy, including the wealth of the French monarchy. Not completely, but it put a giant dent. And it was this crash that stymied the growth of a lot of France's military and economic power all over the world. In the same year, 1720, the British went through the same thing with the South Sea bubble. Speculators started to say, okay, there's going to be so much trade going on with South America that this is going to be a gold mine. So the British suffered the same speculative fate as the French, at least when it came to this investment. But this did not destroy the British economy. It harmed them, but they were able to quickly recover because 1, they are a bit more industrious than the French, but 2, the British were going through the Industrial Revolution, so they were revolutionizing their wealth. When I'm talking about the British, I'm talking about the aristocracy and of course the capital holders. Now these 2 huge crashes which happened at the same year made the Dutch very, very happy. The Dutch were directly competing with the French and the British for territory and money. All during this time, the Dutch still had the world reserve currency status with the Dutch guilder. And it was these 2 huge bubble bursts that kept the Dutch guilder as the world's #1 currency until 1795. Last thing I'll say about the South Sea bubble, it may have been the reason why the British did not expand so much more into South America, and it's probably why the people of South America speak Spanish instead of English. Closer to modern times, let's go to 1991 with Japan's real estate and stock market bubble burst. While it didn't destroy the rest of the world's economy, it was one of the most significant market crashes in history for a country to endure. Real estate prices fell by over 80%. The stock market lost 60% of its value from 1991 to 1995. They went through a deflationary spiral for 10 years, and they still haven't really recovered from it. Let me show you something. This is Japan's GDP growth before and after the bubble burst. So you see before 1990, we go up to 7%, 9%, 5%, and then the crash happens and Japan barely is able to break past 3.5% GDP growth. In some cases, they have negative GDP growth. Total value lost by the nation of Japan was well over $10 trillion. Runner up, number 2, we have the 2008 housing crisis, also known as the Great Recession. Some people claim that the Great Recession was actually the most catastrophic asset bubble that we've ever seen because it affected more people and took out more money from the world economy than even the Great Depression. The total loss of market cap in the real estate market dropped by $4.2 trillion, so that was about 20%. And total global GDP contracted from 5.6% in 2007 to negative 0.1% in 2009, about $1 trillion. But the total loss in world financial markets was $30 trillion. And about 50% of global market capitalization dropped. The entire world market had to follow the US in just making up rules that things which have no value now have some kind of value just to get us to recover from this. And it took over a decade. We are still feeling the effects of this recession because we are seeing a housing shortage of 5 to 6 million houses pre-trend of 2008. But the #1 most devastating bubble burst was during 1929 to the 1930s, the Great Depression, which was only fixed by World War II. In the United States, unemployment rose from 3.1% to 25% in 1933. That's a quarter of the workforce, and wages dropped by almost 50%. And look, consumer prices fell by 25%, and wholesale prices dropped by 32%. Newsflash, that didn't matter because 25% of the country was not working, and the other 75% saw their wages drop by almost half. They couldn't afford these dirt cheap prices. Our GDP fell by 29% from 1929 to 1933, and industrial production in the entire world declined by 30%. Our stock market lost 90% of its value from its peak in 1929 to 1933. And these numbers of wage drops, unemployment spikes, and overall deflation impacted the entire world. So a lot more people went into destitute poverty during the Great Depression than the Great Recession. It's the Great Depression that led to so much instability in Europe that gave the perfect fertile grounds for World War II to come by. It was the Great Depression that brought us to the closest brink of civil war since 1861, and we also dealt with a potential fascist coup in 1933 because such a progressive president was elected by the masses. The crazy thing is, nobody saw the asset bubble coming. They thought times were just going to continue to be prosperous, even when they weren't. And if you're curious about the Dutch tulip thing, they are still the #1 exporter of tulips in the world. I believe they have 80% of that market. And tulips don't even come from Holland. It comes from Turkey. I am the Geo Husar. If you want my supplemental content about whether or not we're in an asset bubble, you know where to look. One of the best sources on this app would be the economist Clarke, who is an actual economist and a professor of economics. Thanks for watching.